Good day, grade 12s. My name is Carden Madzokere. I'm the author and publisher of the Distinction Bound Student Textbooks, and welcome to May-June 2025. Right, so we are going to start with paper 1, and we are going to work with the assumption that a learner is focusing mostly on macroeconomics. That means this learner is going to choose question 1, obviously because it's compulsory, question 2 because it's macro, and skip question 3 because it's economic pursuits. So my assumption is the learner is not well prepared for economic pursuits for obvious reasons. It's the more difficult module of the two. So it's my recommendation 1, 2, skip 3, answer 4 because there is macro. Part of it is economic pursuits, so you can't avoid that part. You will have to answer, do your best, because you've done the topic. Even though you're not as good, you are going to earn some marks. Then question in section C, question 5, skip question 6. You don't even need to worry about question 6. That learner can actually get a very good mark. So let's have a look. So this is May-June 2025, paper 1. It's a 2-hour paper, obviously. And it was written as a supplementary paper. You know that paper that is written if you don't make it in November, then you can write a supplementary paper. It's a 2-hour paper. It's 150 marks. So this particular paper consisted of 13 pages. Section A, compulsory. Section B, answer 2. That's where I'm saying you can choose questions 1. Okay, question 1 because it's compulsory. Section B, you choose 2 and 4 because there's macroeconomics. Skip 3 because it's economic pursuits. And then you can go through the instructions, answer only the required questions. If you answer 2, 3, and 4, they mark 2 and 3. If you answer 5 and 6, they mark only question 5. So you'd rather not waste time. Number the questions correctly. Now, this applies to those learners who become lazy to write the number in full. For example, if the question is 1.1.1, they just write 1.1, 1.2, 1.3. They are lazy to write it in full. Well, you are being instructed here that you answer correctly according to the numbering system that is used in this question paper. Then read the questions carefully. Start each question on a new page. What we mean by each question, we don't mean 1.2.3, 1.2.4. No, we mean question 1 on a new page, question 2 on a new page, question 3, question 4, question 5. So each question must be answered on a new page. But from 1.2 to 1.3, it's still the same question. So it's still question 1. So that, is what they mean. Then leave 2 spaces, 2 to 3 lines between subsections of questions. That is from 1.2 to 1.3, something like that. From 2.4 to 2, something like that. And use only black and blue ink. Answer the questions in full sentences and ensure that the format, content, and context of your response comply with the cognitive requirements of the questions. So what we mean here, there's different cognitive levels. So you must, if so many learners list when they are supposed to discuss, so something like that. If it's 2 marks, then you will be awarded 1 mark if you are not following the cognitive levels. So when it says discuss, we want a discussion, say more than just listing the facts. Because if you merely list facts, we are going to punish you. Then use black or blue, I said. Then you may use a non-programmable pocket calculator and then write neatly and legibly. Legibly means we must be able to read what you are writing. So make sure you're neat. Right, section A, compulsory. So everyone has to get this one right. Now we have the usual 2 A's, 2 B's, 2 C's, and 2 D's. Even though, however, in Gauteng, they normally, in the prelim exams, we had an argument during the June marking. The answers were not 2A's, 2B's, 2C's, and 2D's. And what they say is it's not an official instruction that the answers must be 2A's, 2B's, and 2C's, and 2D's. So it may not, but I've seen the consistency in the final exams. It almost always is the case. So when it comes to the prelim exams, it might not be the case, especially in Gauteng. Other provinces, I see they kind of like follow that. I don't know why the Gauteng ones don't want to follow that. But yeah, it's story for another day. So this particular one definitely will be 2A's, 2B's, 2C's, and 2D's. Because like I said, they normally are consistent in the final exams with regards to that. It has been the case. Unless they make a mistake where there are two answers and then now we have to adjust the memorandum to suit that. But their goal would have been to make it 2A's, 2B's, 2C's, and 2D's. Right, so options are given, so you must choose one option. And when you say A or B, automatically your answer is wrong. Where you don't know, rather guess, because you can't leave it blank. It's 2 marks. Those 2 marks are very, very important. I don't think anyone can afford to lose 2 marks. Whether you are a level 7 learner, because that can make you get 79. If you're a level 1, it can make you get 29 instead of 30. So if you 49 might deprive you of a bachelor. So each and every one of you cannot afford. There is no level of learner that can afford to lose these 2 marks. So when you don't know the answer, try to use the 2A's, 2B's, 2C's, and 2D's to guess. Maybe sometimes the one you don't know is the one that's missing. So if you already have your A's, your B's, but you have one C, then make it a C, because your chances would be very high that your answer is correct. Then you can have total 16 marks. Right, so let's look at number 1. Consumer spending that is independent. So there's a keyword, independent of the level of income, is known as autonomous. Well, I usually say, let me do it from this question. I usually say, don't look at the options, read and have an answer in your head. I think that works. Okay, so I did not do it here. I'll do it from now on. So consumer spending that is independent of the level of income is known as autonomous consumption, because induced is affected by the level of income. So we say autonomous consumption can happen even when income is at 0. So this can come from a de-saving or making use of our savings, whatever it is that can fund it. Even a grant can be regarded as, autonomous consumption, where someone can then get from the government some assistance. So it is autonomous, because the one that is affected by the level of income is induced. So this one is when income is above 0. Right, an estimation of new data. New data. So that means unknown, which is, for sure. Like that's what I'm saying. Based on the facts of something that is known. So we usually say when we use what we know to predict what we don't know. So this is a technique that is used in forecasting, and it's part of the essay for business cycles, discuss in detail features underpinning forecasting. So where we have leading, lagging, coincident, and composite indicators. Then beyond that, we have extrapolation, which is the answer for this one. I might as well put it. We have moving average, we have trend line. Oh yes, there they are. And we have the length. So these tools can be used to forecast, but this one, let me explain each though. So a trend line it shows the general direction in which the economy is heading, and moving average calculates a series of data and finds some averages there and uses those averages to make predictions. The length it measures it's actually measured from peak to peak or trough to trough. So we use it to make a prediction on the next one, assuming that it could be the same length. Amplitude is another tool that we can use. It's not here. So amplitude, it measures the intensity of a business cycle. It's that vertical distance between a trough and a peak. So all these are tools that can be used to forecast. But in this case, we're referring to extrapolation. Right, the next one. A free rider cannot be excluded from consumption of what kind of a good? Well, public goods. If we don't say public goods, well, we are saying here something can be, another word that can fit there is community goods. If not community goods, then it will be funny for us to say a free rider cannot be excluded from the consumption of a non-excludable good. That would be weird. But if there is no public good, then community good can be the answer. Okay. Then, well, another characteristic. So let's talk about cannot be excluded. So that means we are saying non-excludable. Another characteristic of this good is that it's also non-rivalry, meaning consumption by one does not diminish consumption by the other. Okay, so that's why, anyway, it's one of the reasons why we have the government in the first place, because free operating markets, such goods will be missing. So it's a cause of market failure, because we say market failure is failure of markets to allocate resources at an optimum level. So when a good is non-excludable and non-rivalry, you'll find out that free markets will not make provision of these goods. So for that reason, they'll be missing on the market, which we call market failure. And then government should intervene for that reason and make provision of these goods. So we call them public goods and services. Sometimes you can say pure public goods and services, and we can call them community goods. Right. A decrease in the value of, okay, so we are having this word, it's key. Decrease in the value of one currency. Already by this time, the answer is, before I continue, by this time the answer is either depreciation or devaluation. So the next thing we're looking for now is the cause of this decrease. If we find out that the cause is something natural, then no, not natural. The cause is market forces, then it becomes depreciation. And if we find out the cause is the SARB, then it's the devaluation. The answer is obviously not appreciation, because it says decrease. The answer is not a revaluation, because it says decrease. Those two would come if the question said an increase. Okay. So now when we see this market forces, then it removes devaluation. It only leaves a depreciation as our answer. So our distractor here is devaluation. These two are absolutely wrong, because we said already from here a decrease. Okay. Let's move on to the next one. The next one is a trade agreement. So there's a trade agreement that sets the rules. So these are rules governing the exchange of goods between countries is known as, that will be a trade protocol. Let's see. So our trade protocol will be A. The next one, well, maybe one word I can talk about here is trade liberalization, which is like the absence of things that can deprive trade. So it's free trade, basically. Trade liberalization is trade where there is freedom. So it's free trade, which is the opposite of protectionism. Right, the next one, oh sorry, my answers are coming out. The application of scientific knowledge, scientific knowledge to develop new innovation in the production process. This one will be technology. Let's see. There we have technology. Okay, this one doesn't really require much. The government's key activities and timeframes. Key activities and timeframes for implementing industrial development programs. That will be EPAP. EPAP. Let's see. So there we have EPAP, Industrial Policy Action Plan. Sometimes we abbreviate it as EPAP. So that's why I'm saying that is EPAP. All right, the next one, a global organization that provides financial assistance. This one is very tricky because if we look at the answers, I saw it when I was preparing this particular video. I saw it that this one will be very tricky. If you look at the options, they almost all seem to be, this one, a person will probably have to guess, but in this case, it's the World Bank. It is because all these are global organizations and they kind of like do this. The United Nations will assist. World Trade Organization, maybe this one only, because this one, it will have to specify and say it's about trade. So this one is the only one that might not seem to be posing a challenge. One might want to say International Monetary Fund because we are provide financial assistance. So according to our answers, it will have to be the World Bank. Okay, so let's have a look at our answers. So we have our memo here. May, June 2025, Economics Paper 1 Marking Guideline, 150 marks, 23 pages, some instructions if you want. And these are instructions to the marker. They are important to you. You might want to go pause the video and look at the bold parts. And you can ask questions in the comment section if you don't understand. Right, so we have our multiple choice. Yes, we said autonomous consumption, which is spending that is not affected by the level of income. So it happens even when income levels are at zero. Then we have extrapolation, which is a technique of using what we know to predict what we don't know. Then we have community goods. We said they are non-excludable. Then we have depreciation. We said it is a decrease in the value of a country's currency. And this one, it was a trade agreement. It's a trade protocol. And then that scientific method in the production process, we said technology, and then Industrial Policy Action Plan, EPAP, and then the World Bank. Okay, so these are our answers. Let's go to 1.2. So 1.2 is column A and B. My recommendation for column A and B is that before you look at these options, try to come up with an answer from your head. Okay. So when we look at this one, we can start with a real flow. So I'm going to be underlining only the letter. Then already we eliminate. So we are going to use the elimination method. Okay. Right. So A, if I read A, aims at eliminating poverty and reducing inequality by 2030. That will be the national. Should I take on this side? I think let me. Okay, I'll take both sides. Okay, so A is gone to National Development Plan. So we already remove A. So that's how I do. I don't really go by looking at this. Then I start looking. I feel like it will take your time. So if you read a description this side, the answer must come in your head And when the answer comes in your head, it's going to help you to do it fast. Okay. An excessive accumulation of body fat that has negative effect on health, that is obesity. Now, many people will be like, how is this economics? Well, we have the topic, what is the topic, by the way? It's economic and social performance indicators. Under that topic, we have social indicators. Let me see if I won't forget. We have demographic indicators where we talk about life expectancy and I think literacy rates and things like that. So demographics. Then we have income distribution indicators. Then we have education indicators where we talk about literacy rates. After education, I think we have. I'm having a problem with my kids opening and closing doors. I hope it's not disturbing. I said we have demographic, we have income distribution, we have education, we have urbanization, I think. We have housing and services, I believe. And then we have nutrition. So under nutrition, that's where we discuss height for age, we discuss weight for age, where we have malnutrition, and we also have overweight, obesity. So that's where we do it in our syllabus. If in case you're wondering, what does this have to do with the subject? Okay, I was just trying to clarify that part. Right, the next one. So we're now on C. So C says here, transfer of functions and ownership from entities from private sector to the public sector. So this one is going to be nationalization, and the opposite of that being privatization. So I'm sure it will be there as a distractor. I'm not sure. I didn't try to see that. All right, the next one. So now we're on D, and we still have a couple of numbers left. So 1, 2, 4, 5, and 7. Okay. So with D, D says an incentive that aims to provide investment in the training of the South African labor force. That will be skill support program. Okay. So we take D and then we match it with the skill support program. So an incentive that aims to provide, and that is it. Then E, let's see with E, countries share a single monetary system, one central bank, and a unified fiscal system. That is known as an economic union. So this one is gone, economic union. We still have 1, 2, 3. Okay, so we still have 3 and we have 4 this side. So one of these is a dummy. Okay, let's see. Transfer of functions and ownership of entities from the public sector. Yes, this is privatization. So it is this is the dummy. It's the one that is not related to anything. So this one was distracting you on nationalization. Okay, so then it's out of the way. Then we go to G, and let me see. Yes, G. Movement of goods, services, and factors of production between economic parties. That will be real flow. So real flow is taken, and G is also taken. So now we're on H. Normally we don't lose marks here because matching is one of the easiest things ever. Right. So let me see. We have these 2 left. Okay. When a country can provide a good or service cheaper than other countries while using the same resources, we say that country has an absolute advantage. But if a country has a lower opportunity cost, then we say they have a comparative advantage. The last one is now obvious, illustrates the relationship between unemployment and inflation. This is the Phillips curve. So we do this one in, there's also a possible essay. You see that when you study an essay, because you are aiming to, you are hoping that the essay will come and the essay doesn't show up, well, you might still earn marks from it. Even if it doesn't come, you can still earn marks in multiple choice, in column A and B, even in section B. So the Phillips curve will be essay number, let me see, number doesn't matter, but it will be under discuss in detail the new economic paradigm, where we have demand side and supply side policies. We also discuss inflation and unemployment graphically. So the Phillips curve is the curve that will help us with that. All right. Let's look at our answers. Okay. Should I just, yes, let me just, but we won't remember. Oh, yes, it's there. It's given like that. But still, we won't, okay, there they are. You can pause and write them down, then go back there, and then you'll see we match them correctly. GICH, like that, EAD and A. Okay, so this one will be difficult for me to confirm, because this one you could remember these are the words we talked about. So here it's quite difficult. But one thing we remember was there was one that was not there completely, that was F. So that's the only one we can come here and see there is no F. So the rest you can do it back and forth. You can pause the video and it's not difficult. Okay. Right, let's go to one of the sections or parts where learners will most likely leave blank. Okay. That is 1.3. So 1.3, you have to give a term, and it's usually posing a challenge to our learners. Right, so the proportion of additional income that households choose to spend on goods and services, that is the marginal propensity to consume, the opposite being the marginal propensity to save. An economic indicator that changes at the same time as the economy is known as a coincident indicator. That one is simple. The one that changes before is leading. The one that changes after is lagging. And when we put all indicators in an index, that becomes composite. Number 3, the item in the balance of payment that records transactions linked to the purchase of businesses or fixed property, that is direct investment. Other investments we have, okay, this one comes in the financial account because if you remember, on this one we have current account, which has merchandise imports, merchandise exports, merchandise net gold exports, service receipts, service payments, income receipts, income payments, trade balance, yes, and then we balance the current account. So that is the current account. Then from there, then I forgot current transfers. Then we have capital transfer account. Then from capital transfer, we have the financial account that has, let me see, come on, it's running away. It is direct investment, portfolio investment, financial derivatives, and other investments. And then instead of us saying, so we have 4 accounts, then we can also put reserve assets. But if we exclude reserve assets from the financial account, then we can say the BOP has 4 accounts. So it depends, are we making it part of the financial account or separate? If it's separate, then it's current account, capital transfer account, financial account, and reserve assets. If we put reserve assets, then we can say 3. One, but as long as you know that, yes, all these are components of the BOP. So within that BOP, in the financial account, this question is actually asking about direct investments. Okay. The next question, discretionary changes in monetary and fiscal policy, attempting to change the level of aggregate demand. All right, so we are not really saying change in what direction. Are we changing up or we are changing downwards? Okay, this one will be a demand side policy. We use monetary. So this, the new economic paradigm. So it will be easy if you practiced again. It tells me what I was saying about the Phillips curve, to say it is an essay type question, but we are seeing things that you study for it and they appear in multiple choice, they appear here, and many will not know it's referring to that. Normally it's because people are cramming instead of understanding. The collaboration between the government and private companies to finance, build, and operate large infrastructure programs, that will be public-private partnerships. But sometimes you will see that we can say private-public partnership. As long as you have those two, that will be fine. Then measures the number of children who die before reaching 1 year. If they change it to 5 years, then you just say under 5 mortality. But this one says 1 year, so we just call it infant mortality. All right, let's have a look at our answers. This one you will remember. It's just like multiple choice. Let's have a look. All right, so when we look at our answers, we have marginal propensity to consume. Take note, we are not marking MPC. So if you said it in short, you will not earn your mark. Now, is it fair? Well, I'd say it is fair because you should follow instruction. Give one term for each of the following descriptions. Write only the term next to the question number. Then here they say abbreviations, acronyms, and examples will not be marked, be accepted. So the fact that you ignore an instruction does not make us bad people when we mark you wrong. Clearly, we can tell that, yes, you understand, because you said MPC, it means you know, but why are you being lazy and saying MPC? You are supposed to say marginal propensity to consume. So the same applies to those who say GDP, gross domestic product. So you must always write in full. In other places, it can be accepted. In section B, if you say EPUB, like you remember when I was saying EPUB for that policy, then multiple choice, it is okay. If it's section B, it's okay. You can abbreviate, no problem. Okay. Right, so that's it with our, I'm not done. So there was marginal propensity to consume. Then here, coincident. I also explained leading, lagging, and composite. Then we have direct investment. I also remember I told you there's also portfolio, there's financial derivatives, there's other, and then reserve assets as part of the financial account of the balance of payment, which also has current account, and also capital transfer account. Right, the next one is demand side policy. Yes, it's not supply side policy, monetary and fiscal policy. Then private public partnership. Remember, I also told you we can say it in the other way around, which is private public partnership. Then the last one is infant mortality. When I said, take note, it says 1 year. So we can change the question and make it say 5. Then it becomes under 5 mortality. All right, so that's it in as far as section A is concerned. So your 30 marks up, then we can start with section B. So section B has 3 questions. You answer only 2. Remember, we have that instruction that says if you answer questions in excess, you will only be marked 2, the first 2. They don't look at the ones you performed better at. They are going to give you only the first 2. Right, so the first one says, name any 2. Let's see. Only 2 types of exchange rate systems. So in as far as exchange rate systems are concerned, We have free floating, where forces of demand and supply will determine the value of a currency. This question is related to multiple choice, where we had appreciation, depreciation, revaluation, and devaluation. I can link the two questions and help you. So the answer was depreciation there in multiple choice. That is something that happens in a free floating exchange rate system, because it's a system that uses forces of demand and supply to determine the value of a currency. The next one is managed or controlled floating. That's what we call it. So this one, the managed or controlled floating exchange rate system, it is when the Reserve Bank or the monetary authority of that particular country makes adjustments of its own currency by devaluing it or revaluing it. So when they do that, then the system they are using is called a managed or controlled floating. Right, the next one is fixed. So with a fixed exchange rate system, a country's currency goes up and down based on the ups and downs or the volatility of what it's fixed to. So a currency can be fixed to a commodity. A good example is gold. So if the rand was fixed to gold, let's say 1 rand is equivalent to 1 ounce of gold. When gold increases in price, the rand follows suit. So basically, because the rand is backed by gold, it's fixed to the gold. Another way in which a country's currency can be fixed is fixing it to to another currency. So if a currency can be fixed, let's say to a US dollar, the currency for that country will appreciate and depreciate along with the US dollar. A good example is the Lesotho currency fixed to the rand and the Swaziland currency fixed to the rand. These currencies are always 1:1. So their currencies fall when the South African economy is doing bad. Lesotho and Swaziland, because it's 1:1. So 1 rand is equivalent to 1 maluti. It's like that. Okay. Now let's move on to number 1.1.2. Why is investment regarded as an injection? Okay. So you must know that injections take money in and leakages take money out. So an investment adds to what is already circulating. So investments would result in money flowing from the banking system, because let's say that's where we put our money when we were saving. Because investments come back as savings that were put in the past. So banking systems will then release that money, you see, to businesses, which increase the amount of money in circulation. So for that reason, it becomes an injection, as opposed to it being a leakage. I don't know if I should just take these two and then let's rather, because I want us to deal with data response separately. All right, so let's have it. So here is 1.2.1, 2.1.1. Name any two types of exchange rate systems. We said free floating, we said managed or controlled floating, we said fixed. I explained. Why is investment regarded as an injection? Okay, let's rather take the points here. So our points are: investment results in money flowing from, I might take this part, from the banking system to businesses, which increase the amount of money in circulation. So the money in circulation, because we call it a circular flow, a model that shows how participants within an economy interact. So as these participants interact, money flows. It flows during consumption spending. It flows when, and we call it money flow, actually. It flows when payments are made for goods and services by households, which is C, consumption spending. It flows when payments are made by businesses to households in forms of wages, salaries, profit, interest, you name it. It flows when G, government spending, when government spends either on us for the factors of production, so on the factor market. It also flows when government spends, G, on the product market as they buy goods and services from businesses. So there's as that money circulates or flows, there are some leakages that happen. Tax is one of them, savings is one of them, and then imports is one of them. Then other than investment, which we're asking here, why is it an injection? We also have exports when goods go to other countries, and we also have government spending as an injection, which would have come as, and if you check, each one has an opposite, because G, that's T, the opposite. Tax when money goes to the government, then G when government spends. Another opposites, we have savings and investments. So when we save, we put money in financial institutions, and then when they release those funds into from the banking system, like what we see here, to businesses, that becomes an injection. But when businesses save, we say it's a leakage. So those are opposites. We have the last opposites, exports and imports, which is an obvious opposite. All right, so that's it in as far as the first part is concerned. Let's go to our first data response question. So our data response question says, study the cartoon below and answer the questions that follow. South Africa's economic activity. Then we have recession street. And so we're traveling on a recession street. So it's telling you that the economy is going down. So that's the beginning of a contraction phase. And then the driver says, recovery is now going to take longer than expected. So a reason could be we are starting our recession, there's going to be a depression, then finally we get to a recovery. Then after the recovery, then there's prosperity. So the economy was doing well because a recession, it starts after a prosperity actually. So the economy was doing well, then now it hit a pothole according to this cartoon, and then we start going down. Let's have a look at our questions. So the first question is identify. Now, let me say something about this. And I'm going to make it a thing throughout this paper to underline the action verb and analyze the question with you, because many of you fail to make a reasonable analysis of the questions. So we are saying identify. The word identify means just point at something. So it has to be something that is there, because to identify is to say, oh, there it is. So let's have a look. Identify what? A contraction phase. So our contraction phase has a recession and depression. Take note, a recession and depression. Then our expansion phase, which is the opposite of a contraction phase, has two also, recovery and prosperity. So identify a contraction phase. So it means there is a phase. So how many phases do we have here? From the four things I mentioned, we have two. Number one, we have a recession. Okay, so they have it here as a picture, so I cannot underline. So this recession is one. This recovery is two. So because we have a recession and a recovery, already we have two phases of a business cycle. The phases we don't have here is depression and prosperity, two intensities, because the other one is the rock bottom, the other one is right there at the top. So, but which side are we taking now? We were taking the contraction. So this one is on the expansion side, so it's wrong. So the answer is a recession. So that's how you identify. The answer would be there. So someone who says depression does not understand the word identify, even though he understands that it's part of contraction. And someone who says pothole is even better, than someone who says recession, because at least the one who says pothole knows that identify means show me on this cartoon the thing I'm looking for. Someone who says recovery is still better than someone who says depression. Even though recovery is on the expansion side, at least the person knows that this is a phase, number one. Number two, the action verb says identify. All right, let's move on to 1.2.2. Right, so 1.2.2 says name. Okay, I promised to action verbs, name. So you don't explain, you don't describe, you don't evaluate, you just name. Okay, name any one monetary policy instrument that can be used to influence economic activity. Now, we don't care influence in what sense. Do we want economic activity to go up? Do we want to regulate it for it to go down? Because maybe sometimes we have inflation, so we want to lower it. So in other words, I'm saying expansionary or fiscal, it doesn't matter. But what tools do we have to our disposal? So we have, I'd say the common one, which is interest rates or repo rate. In full, we can say repurchase rate. So it is the rate at which the Reserve Bank lends money to commercial banks. We have open market transactions where, the Reserve Bank can participate on an open market, demand a currency, supply a currency. They might want to influence the value of the rand, so they might participate in an open market, and that participation can actually influence, because that's what we want to know here. We can also have cash reserve requirements. This is for banks. We can have moral suasion. It's for banks again, persuading them to act in a certain way. And we have exchange control, where the Reserve Bank can control the amount of foreign currency that an individual or institution can purchase. This can be used as a measure also to influence foreign trade. Okay. Now, the next one is briefly describe the term amplitude. Well, I like to say an amplitude measures the intensity of a business cycle, or severity of a business cycle. It is that vertical distance from a peak to a trough. I think I explained it in multiple choice. Let me just say section A, where we talked about other tools that can be used. The answer in that case was extrapolation, where we said we also have moving average, we have trend line, we have length. So amplitude was not there. Then I said yes, also amplitude. I guess they didn't put it because they knew they wanted to ask about it here. The next one, why are leading indicators important to policymakers in the economy? Well, the answer to this one kind of becomes obvious, because it gives that warning way in advance to policymakers, so basically the government, of changes in aggregate economic activity, which helps them to formulate suitable economic policies. So a policy will be useful, or will be relevant, because something told us ahead of time that this is what could happen. So if the signal is that the economy is going to turn around and start to recover, how the policy is implemented supports that recovery. Obviously, the things that we don't support is when the economy starts to go through a recession. So if something signals that a recession is coming, we can try to implement policies that prevent, because a recovery is something we would support. A recession is something that we would try to prevent. And remember, it is officially a recession if it's 2 consecutive quarters. Right, then we move on to the next one, which is the last part of 2.2, basically, the 4 marks. Remember, our questions, I always say they are staggered, 1, 1, 2, 2, 4. Look at these mark allocations here, 1, 1, 2, 2, 4. So we are on the last one. How can an economic recovery benefit the South African economy? So when the economy starts to recover, how do you think that can help the economy? Well, we can talk about how it can benefit the government. So the government can actually collect more tax when the economy starts to recover. And those people who depend mostly on the government through social grants and whatnot will reduce the dependency burden. Another one is that the financial capacity of the government to develop infrastructure and other projects would increase as it receives more income, as in the government itself. And then economic recovery may assist the government to achieve its objectives, such as poverty alleviation and the reduction of unemployment. These are key factors or key problems or key socioeconomic problems that South Africa keeps facing. Right now, unemployment is going up 33%. So poverty alleviation can be dealt with. And then more factors of production, land, labor, capital, entrepreneurship will be employed. And so that means standards of living will improve because of that. And then maybe we can also add business confidence can be positively affected. Right. So that's it in as far as this one is concerned. Let us have our answers before we go to 2.3. Right. So our answers: identify the contraction phase. The keyword was identifying. So we did that. And then so it was a recession. Name. So you see here we are not describing or anything. We're just naming. Interest rates I explained, or repo rate. I even said it in full. Repurchase rate. I even defined it. I do this so that because we don't know what our question is going to ask in the exam, because here we are doing exam prep, right? It might appear in multiple choice or anyway. So I always try to explain the terms that we're coming across here. I explained open market transactions as, those transactions that the Reserve Bank can also make on an open market to influence the value of the rand in most cases. It is seen as free-floating still, even if the Reserve Bank may have an influence. It is not devaluing. It's not, but in a way, it's kind of like cheating the system, right? Right, then we have cash reserve requirements. This one, I said it refers to banks. Well, the reserves that each bank may be required to have, or the cash that each bank may be required to have at the Reserve Bank. And then moral suasion, we said when the Reserve Bank persuades banks to act in a certain manner. And then exchange control, which is a limit or a control on the amount of foreign currency that a business or institution can actually have or buy. Then the next one, briefly describe. So describe in brief. You don't have to go in depth. We go in depth in the essay, actually. Right, so briefly describe the term amplitude. I defined it as, a tool that measures the intensity of a business cycle. Here they say measures the vertical distance between a peak and a trough. I also mentioned this part for peak and trough. But what are we measuring? Well, how severe is the underlying forces? Then why are leading indicators? Why? So what do we want? A reason. Because, not how, why. So why are leading indicators important? Well, they're important because they give advance warning. So they warn us way ahead to policymakers. You see who it is for, to changes in aggregate economic activity, which helps them to formulate suitable economic policies. Right, then the last one was, how can an economic recovery benefit? So how? Tell us how. So here we want a process, you see. Here we wanted a reason why. How can an economic recovery? Also, check what we are talking about. So we want an economic recovery. So this is a phase of a business cycle that we saw in the cartoon. Recovery was there, I think. Was recovery there? Let's see. yes, there is recovery. This phase. So this phase is being talked about here as in how can it benefit the South African economy. So we are starting and benefit what? An economy of South Africa. So we have three pieces to this question. How? So we want the process. Number two, what? The economic recovery, a phase. On what? On the economy of this country called South Africa. So the country doesn't really matter. The answer will be the same for any country, even if we say benefit the Zimbabwean economy, benefit the Nigerian economy, the answer will be the same. So the government, in this case of South Africa, the government, in that case of Zimbabwe, of Nigeria, see, the government will collect more tax. So there's an increase in tax revenue. As households and businesses receive more income because the economy is starting to recover. And I talked about the dependency burden. Yes, those people who rely on social grants and all sorts of things, there won't be that much burden on the government. Then the financial capacity of the government to develop infrastructure. So government will have the financial capacity, they'll be able. Then also the other projects, other projects. Then economic recovery may assist the government to achieve its objectives. Objectives. Even if you want, you can say it's macroeconomic objectives like economic growth. You see, full employment. Yes, it will. To be honest, if you want, but the examples we were given here are poverty alleviation and the reduction in unemployment. So you can say full employment. So if you want, you can even alter this statement and say achieve its macroeconomic objectives, such as, then you say economic growth, full employment, price stability. You can throw in that. Then more factors of production. So that's more land, labor, capital, and entrepreneurship are employed. So if they're employed, okay, this one is going to be difficult. How do I get rid of it completely? Yes, I'm not going to highlight this because it's going to give me problems. So yeah, more factors of productions will be employed. That means more land, labor, capital, and entrepreneurship. That means also more wages and salaries, more interest, more profit, more economic rent. Then business confidence may increase. Yes, businesses will be more confident. That can really help. Okay, this one doesn't want to highlight. Right, that's it in as far as the first data response question. Is it the first one? Yes, it is. So we're moving quite slow. All right, let's have a look at 2.3. So 2.3 says, study the graph below and answer the questions that follow. So we have South Africa's trade, terms of trade. So this is the ratio of import prices to export prices. So we see here we have our index here, 0 to 200, and then we have exports as this bar, import prices, this bar, and then the terms of trade, which is what I underlined here, and what I defined also, the ratio of export prices to import prices. And it's calculated by looking at, we put the index of export prices on top and put the index of import prices at the bottom. Well, you can use weird ways of trying to remember this. Your X on top, if you want. Right, so exports, imports, terms of trade. The price. So this is like, in general, an index for our prices. So it kind of shows how much money, how much it costs. Does it cost more to export, or, like our goods, are they more expensive? So this is a decrease in terms of trade. So it's from 2022 to 2023, in this case, we have worsened. So we can say terms of trade have worsened. And what can improve these terms of trade is if this number had gone up. So clearly we can see what worsened it is because our index for export prices actually decreased, because it went by 0.2 from 0.8 to 0.6. But I don't really mean zero. I mean 176.8 to 176.6. So it went down basically by 0.2. Then on the other hand, the index for import prices, so the prices at which we import goods, it went up. So obviously our terms of trade will worsen. So they worsened from 114 to 108. What it simply means is it's now more expensive for us to import than it was in 2022 if this was 2023. So moving on, we don't have data for 23, 24 and 25, but we only have this. So we'll deal with what we are asked here. So the first question says, identify. Again, identify. So what are we going to do? The answer is there. What are we identifying though? Export price index. And then for which year? Because we have the same for 2 years. Okay, for 20, so we want export price index. So we are going to look at this color or this pattern. It's this one because we want for the year 2023. If we are not careful, we are going to say 154.8. So our answer in this case is this one. I cannot highlight. You see that little hand shows me it's a picture. So I cannot highlight, but the answer is one. Let me see. In export. Oh my goodness. You see, I'm making a mistake and you guys are not correcting me. I hope you were correcting me in your heads. So I'm looking at the wrong one. I said this one instead of this one because we said export, not import. So the answer is this one actually, or at least this one I can highlight. So it's 176, yes, 0.6. I almost got it wrong. Imagine. Right, state the formula. I think I mentioned it when I started. It is terms of trade is equals to index of export prices when I was saying your X on top. Right. Index of export prices divided by index of import prices times 100. Then briefly describe the term globalization. So globalization is the worldwide interaction of countries or economies with trade as an important element. So the key thing with globalization is trade. So when countries become, interconnected and they interact more and in terms of trading, we call that globalization. Right, so briefly describe. So the key word was describe. The key word here was state. So here you just state it. So we can also say name. Explain the effect of international trade. Explain. So you must do some talismans. So explain the effect of international trade. Of what? International trade on what? On production of goods and services. So we want to know, how is production affected by international trade? Give us a clear explanation on how production can be affected by international trade. So your mind can wonder, because of international trade, there's that thing, with international trade, there's, what do we call it? Normally countries specialize. And what do they specialize in? They specialize in making goods that they have an absolute and comparative advantage. We had those, one of the two words, it was absolute, yes, in column A and B, if I'm not mistaken. I think it was column A and B. So we had absolute advantage. So countries with absolute and comparative advantages specialize. So specialization is a cause or a reason for international trade. It also is an effect of international trade. But I'm not yet answering. So I'm saying here, because of international trade, countries specialize. And because of that specialization, they start producing in mass production. So when they start producing, they are going to enjoy economies of scale, which is basically an advantage that companies or countries gain in the production of a good, as their production capacity increases. So the opposite of that being diseconomies of scale. So because we specialize, we mass produce. And because we mass produce, we enjoy economies of scale. So you can take your response around that. All right, so let's have a look at our answers. This one was quick and easy. Right, so we have 176.6 is the one that I almost made a mistake of there, the one underlined there, 176. That's it. Then state the formula. Yes, remember I said your X on top. So key thing, excuse me. So exports, they will be your numerator, imports, they are your denominator, times 100. So that's terms of trade. If you want, you can check, you can take, in that case, we are saying our exports? Our exports is this color. So it's this over this times 100. It will give you this, basically. Could I find my calculator and just do it quickly? Okay, let's have it. So my calculator is still bouncing down the opening, so I'll give it time. There we go. All right, so we're saying 176.6 divided, where's my division sign? Divided by 162.4. Where's my multiplication? Times 100. Right, so it's 108.74. You see, so we round it off, it becomes 7. Okay, so now I'm not gonna close you, I'll just minimize you. Right, so in case we have another calculation, we have our calculator ready for us. All right, so let's bring back the answers. So yes, we just showed you that's how it's done. Then briefly describe the term globalization. We said it's the worldwide interaction. So it's the interaction worldwide of countries or economies with trade. So trade is the key element in globalization. Okay, right, so explain the effect of international trade on production of goods and services. We said explain and international trade, the effects, and then on what? On the production. So we just focus on the production side. Well, Mina, I answered by starting by talking about specialization, and I said because we specialize, and by the way, what makes us specialize? We specialize because we have a competitive. I don't see absolute here, but they just touched on competitive. All right, but I would say competitive because competitive means we have a lower opportunity cost in producing than other countries. So because of that low opportunity cost, it will be better that we focus or specialize in the production of that good. And with that, we then end up trading. So that leads to globalization, basically. I said if we specialize, then we are going to mass produce. They have it in brackets. I would have had it out there. They say here, goods and services will be produced in large quantities, which is mass production, to cater for the world market. Yeah, because the world market is big. So basically globalization, right? And if we do so, we are going to enjoy economies of scale, which is an advantage that we gain for producing in large quantities. Then international trade may promote innovation. Okay, this one I did not mention. It can promote innovation and production of new products. And then domestic production may decrease. So this one you may ask, so why are we mentioning it? Because it's a disadvantage. Remember, we want the effects, and we didn't mention whether we want positive or negative. So you should actually consider both. Ne? Right, so that's it. Oh, was there another one? How will a decrease in terms of... Oh, okay, this one is spoiled. I'll just give it the way it is. I thought I addressed this, but I didn't. Okay, so how? So we have the how. Tell us how. Will a decrease in terms of trade. So something that we see in the table here. But I mentioned it in the intro when I was still analyzing this. So us going from 114 to 108, the question is asking that. What is the effect of that? So how? Let me come back. Where is it? So how will a decrease in terms of trade, so like what we did there from 114 to 108, influence the economy? If we want, we can say the economy of South Africa. Right, so we have three things to our question here. How will, okay, also we need to take note. So we have four things because we can change this question and say, how will n increase? So here we want a decrease. So like what we have in the extract, how would that have an effect or influence on the economy? So let me just go with what they have here. A decrease in export prices. So you know what they're saying here. They're saying what we actually experience here. They're talking about, look, index of export prices, this one, 17. The one I was saying, it went down by 0.6. You see? So they're talking about that. And take note of what is being said here. A decrease in export prices will generate less export income for the economy. I wouldn't start with this. I would want to start with terms of trade itself, instead of talking about this decrease, because we can talk about this decrease, then we can also talk about this increase. But ultimately, we can attack this first. Then to add points, we can rather talk about the rest. Let me see if it was addressed like that. Then economic welfare may decrease. Economic welfare may decrease as more resources will be used to produce bigger volumes of exports to compensate for the fall in export prices. So it's still addressing the same point, which we have here. Export prices went down. Then an increase in import prices. So this now is addressing this increase here, like to go from 154 to 162. That increase, it's addressing that. So an increase in import prices. So when import prices go up, will cause more outflow of revenue through higher import payments, higher costs of imports. So obviously it's following up on this point, and lower exports. Oh no. So here it's touching two. So if it's touching two, it's talking about imports and exports. So it basically is talking about terms of trade. Earnings may decrease the trade balance. So I would start with this, and I might want to replace this. Then I would say a decrease in terms of trade may decrease the trade balance of the economy. That's how I would phrase it myself. And I would put it on top because I want to address terms of trade first. So they took the pieces of terms of trade, which is export and imports, and then they discussed them separate. I would take it the way the question wants it, which is terms of trade itself. Okay, I guess I'm clear. All right, so let's take this back. Now we're going to analyze our 8-mark questions. So we start with 2.4. So 2.4 says, I'm having flu. It's starting. It says discuss the financial market within the 4-sector circular flow. All right, so let's do some underlining here. So we want to discuss, what are we discussing? We're discussing the financial market. In our heads, we already know, is that one which consists of banks, insurance companies, pension funds, and the JSE. We also be like, is that one that we can split in two? Again, do you notice this is an essay type question? First essay type question. Discuss in detail markets within a 4-sector model. You see? So don't expect this as an essay already. Don't. Because it's appearing right now. But do you notice something? So many learners deprive themselves when they say, I'm trying to spot the essay. The essay that doesn't come may show up. Look at this. It didn't show up, but it's showing up. And how many times have I explained that, this is a piece of our essay? So this touches one small piece of our essay, which is discuss in detail markets. So it will say discuss, it says in detail. Markets, it won't say financial because it wants all of them. So now that's where you talk about the product market, the factor market, the financial market, and the foreign exchange market. And each one you can split. So under product market, you can talk about consumer goods, capital goods, durable goods, semi-durable, non-durable. So we can take a small portion there and ask it as an 8-mark question. So if it doesn't show up as an essay, it can still show up. Look here. There's evidence. So please, guys, do all your possible essays. Something that doesn't show up in an essay could show up in pieces in section A, in section B. Already we have proven that. We saw 2 questions in section A. We are seeing this one significantly for 8 marks in section B. We are still on question 2. What more question 3? What more question 4? But anyway, question 3 we are not answering because remember what I said. So the financial market can be split into 2, right? Number 1, we can say money market. Number 2, we say capital market. So let's dive in and deal with this one. So it is a market that consists of banks, insurance companies, pension funds, and the JSE. And we even say the JSE is a key institution in this market. So this market, it facilitates the lending and borrowing of funds between economic participants who have surplus funds, because some have deficit. So the ones with deficits, they will go and borrow. The ones with surplus funds will save. So the market is not directly involved in the production of goods and services. Banks, insurance companies, pension funds, I think I mentioned that. And then we have the money market, which is short-term borrowing and lending. And then the capital market, long-term borrowing and lending. And when we say short-term, you know how short it can be? It can be as short as overnight and to less than 3 years. And then long-term, we say more than 3 years. All right, then you can also want to mention about the JSE being a key institution. All right, so let's tackle this one. And once we're done, then we can, look at the last one. Then we are done with question 2. I feel like we're taking too long. Right, discuss the financial market within the 4-sector model. Okay, so financial market facilitates lending and borrowing. This is important. Lending and borrowing of funds between economic participants who have surplus funds and those who are in it. I would put it like, and those who have deficit funds. Okay, so those in need have deficits. Those who put it down, they have surplus. Right, so the market is not directly involved in the production. That's very true. I didn't mention this part. It is not directly involved, so it's like an intermediary. Banks, insurance companies, pension funds, I would add the JSE here, are part of the financial market. The financial market is divided into money market. This is important. And capital market. So take note, short, take note, long. So the money market provides short. Okay, so we have it here explaining this. So that's a good way of taking it, because I might have infused it here and that would deprive me of points. So yeah, rather saying it like this, then you explain them separate. That's good. Oh yes, also then money market includes interbank lending for a period as short as overnight. Okay, if it was me, I would have added and less than 3 years. I would have added that part here. So the South African Reserve Bank administered the function of legislation and managing the money market. Products traded in the money market. Okay, so now we're continuing. Include bank debentures and government bonds. And government bonds in the money market. So the capital market provides long-term savings. So this is key. Long, short. Savings, loans, and investments. The JSE is a key institution in this market. Securities that are traded in the capital market are long-term deposits, mortgage bonds, and shares. So we can twist this question and bring it as 2-mark question. Name any 2 instruments that are, should we say instruments? Financial instruments that are traded on the capital market. So you can say mortgage bonds, you can say shares, you can say long-term deposits. And on the flip side, if you are asked on the ones that are traded, we saw the men, where they debentures and government bonds. Yes, they underlined. So I might as well underline these ones that we have here. So we have long-term deposits, we have shares, and we have mortgage bonds. So these three. So here we have 3, take note, here we have 2. So in case in your exam, they can ask the same thing, but they would say, name any 2 instruments that can be traded or products that can be traded in the money market. Debentures, bank debentures, let's have it in full gear. Bank debentures and government bonds. And then if they ask in the capital market, because this is, let me highlight capital market. And then here, did I highlight in the money market? Okay, so let's highlight money market. All right, so you can pause the video and write these things down. All right, so this is it. Let's look at the other one. So the other one here says, how can, so let's continue with our underlining of action verbs. So how can the supply side, so we want the supply side, measures be used to stimulate the level of economic activity? Okay, so we want also stimulation. Because remember, we can be restrictive, we can be expansionary in the smoothing of business cycles. So tell me, do you expect the new economic paradigm to be in the essay? No. Do you expect markets to be? No. This is an essay again. So 4 times in so far, we are still on question 2. We have 2 possible essays that are appearing in pieces. And so please. So this one would help you if you have knowledge of the supply side. So don't say anything about the fiscal policy, because that's demand side. It was there also addressed. So now it's 5 times. And don't mention anything about fiscal policy. So monetary policy, fiscal policy, Phillips curve, unemployment, inflation, that's demand side. So let's focus on supply side. So you might want to talk about the reduction in production costs. You can also talk about improving infrastructure services, reducing administration costs, cash incentives, reducing unnecessary regulations, which we call deregulation. You want to talk about supporting research and development, R&D. You want to talk about subsidizing. You want to talk about taxes. But that sounds now like I'm saying fiscal. But taxes in the sense of paid, those taxes that are paid by businesses. I know the demand side tax is when we say that, when we talk about personal income tax that will increase disposable income and cause the consumer to go and buy more. Here I'm talking about tax in form of what businesses pay, so that can also be part of the reduction in their production cost. Then they can supply more. So the point is them supplying more. All right. So I think if you touch on those, I think you would have a significant area that you will have covered. So I think that will be it. Let me see if I could have left anything out. All right, so we have, how can the supply side, So reduction in costs of doing business, yes, because it's a supply side. So businesses must, have lower costs. Improve infrastructural services such as public roads and so on. Reducing administration costs. This can encourage potential businesses to be established, and existing businesses will not feel overburdened by administrative costs. Providing cash incentives. Okay, this one can work also to businesses to establish themselves in areas where unemployment and poverty are high. So cash incentives can work. Simplifying rules. This is deregulation and reducing unnecessary. Yes, this is deregulation. So I said this, but I said it as deregulation allows businesses to operate more freely and efficiently. Hence, companies can produce goods faster and cheaper. Supporting research and development. I think I mentioned this one. R&D, supporting research and development, or even doing it on behalf of businesses, so that they don't use a lot of their their human resources in doing R&D. Government can just do the research for them and make it available. It can then work as a form of an incentive, can be used to promote exports as well. So yeah, that can work. Offering subsidies. This one is kind of like in line with cash incentives, but there's a slight difference in definition and actually in what they do. So offering subsidies will mostly seem to be on the demand side, in the sense that it makes us afford, so we go and buy. But it can also make the business to produce more, so supply can increase. Reducing taxes paid by businesses. This part is important, because if it's just if we say reducing personal income tax, then it becomes a demand side policy. So this is trying to make it a supply side policy by specifying what that tax is for. Improving education and job training. This can work as well, because if we do this, we are doing it on the HR side. So there is going to be high levels of productivity. If yes, there it is, higher productivity, because people are well trained, they are highly skilled and whatnot, and they are more knowledgeable. They'll do the job a bit faster. Promoting competition by encouraging entrepreneurship and removing barriers to entry in markets which stimulate production of goods and services. Okay, so that's it in as far as question 2 is concerned. That was quite long. I hope I'm not going to spend this much time in question 4. I'm skipping question 3 blindly. I don't even care to see what it says. So here we have macroeconomics mixed with economic pursuits. So the reason we're taking this question is because it's macro. The reason we're running away from this one is because it's economic pursuits. So this one, the economic pursuits part, we will answer it because we have chosen the question. But we'll try to ensure that at least we do our best. So answer the following questions. Give any 2 examples of exogenous causes of business cycles. So these are factors from outside, and this is according to who, by the way, because we have the Keynesian school of thought and we have the monetary school of thought. One saying government must stay away from markets, and one saying no, government intervention is actually important. So when we say 2 of them, we might as well throw in government involvement as one of them. We can take natural disasters, we can take things like droughts, floods, and so on. We can take climate change or weather conditions. We can take pandemics as well. Okay, so those are the ones in my head. We'll see what we have in the memo. Now, why is it important for the government to promote a more efficient transport infrastructure in the economy? So, okay, we had give, and now we're saying why. So now we want a reason, okay? We want a reason why. Why is it important for the government? So the importance for the government to promote, so the promotion of more efficient transport. Okay, so more efficient will obviously help in terms of minimizing logistic constraints. It can also minimize disruption in production, because if the system is is not smooth, then there's going to be disruptions. It can also reduce the cost of doing business since transport is a key input. That is why you see when petrol goes up, prices generally go up. It can also be used to enable households to and workers to travel more conveniently and at lower cost to participate in economic activities, because if it affects them, then it also has a negative impact on productivity. So basically, if we look at that, it will help us answer this question correctly. So let's have a look. Oh, Ghana, we skipping this part. Then we go up to here. So this is where we are. Give any two. So amongst these ones, I mentioned, I didn't say structural changes. I mentioned natural disasters. I gave examples. I said floods. I gave droughts. Climate change, I mentioned. Weather conditions, I mentioned. Social and economic shocks, no, I didn't. What I also added was government intervention. I also added pandemics also, so you can say pandemics, e.g. COVID-19. Right, let's look at here. So here it says, why is it important for the government to promote a more efficient transport infrastructure in the economy? It minimizes logistic constraints by ensuring reliable transportation and of production inputs and finished goods between regions of the country, to minimize disruption in production of goods and services, which helps to attract direct investments, to reduce the cost of doing business since transport is a key input in production, yes, and also to enable households and workers to travel more conveniently and at lower costs to participate in economic activity. All right, so that's it in as far as this part is concerned. Let's have a look at the next part, which is our data response. Study the table below and answer the questions that follow. So here we have national account conversions for 2023. Item in million rands. Let me underline this part, in million rands. That kind of means this value here is 6 trillion 175 billion 572 million, and this one is 148 billion 361 million. This is 13 billion 104 million, like that. So there's 17 billion 730 billion. This is 7 trillion. So just at the end, we can just throw in an M. You don't necessarily have to call it out. That's what makes it easy. So don't worry about what I'm saying, but I'm just explaining for you to understand what this million is doing here. It just simply means in front of every figure here, we add 6 zeros. So now these become 6, then this is 9, this is 12. So that's trillion. As simple as that. If it was now 15, then it becomes quadrillion, like that. Right, so gross value added, GVA, add factor costs. We said we use GVA to avoid double counting. It might be something asked there. We have taxes on production, which is taxes in the production process. So an example here is pay as you earn. We have subsidies on production. An example here could be an employment subsidy. Then we have GVA at basic prices. So let's underline basic. Let's underline factor. So factor cost is the cost of the purchasing the factors of production. So factor cost is basically wages and salaries to businesses paid to employees by businesses. It's profit, it's interest, it's economic rent. So that's what it is. Then taxes on products, we have VAT, sin tax, you name it, fuel levy. And then subsidies on products, we have like milk subsidy, a bread subsidy, and so on. Then we have GDP at market prices. So this is what consumers end up paying. So that's it. So GDP at market prices was 7 trillion in 2023. Now, it doesn't say if these are constant or current prices, so we don't know. if this is real GDP or nominal GDP. We only would know if it was given. And again, it was published by the South African Reserve Bank. In case they ask, identify the institution or identify the publication, then it will be the quarterly bulletin. Identify the institution, it will be SARB. Identify whatever. Let's have a look. So we start with identify. So yes, identify the item. That refers to prices paid by consumers. That will be market prices. So we have it there as market prices. Number 2, name. So here we are going to, but we can say it in full though. Gross domestic product, because I can't just say market prices. I think I should say gross domestic product at market prices. So it's going to be the whole thing. Right, name any one example of taxes on products. Well, I said already, value-added tax, excise duties or sin tax. We can have fuel levy and so on. So that's a lot. We need only one. Right, so name, we're just going to throw the answer as one of them. Briefly describe. So we are describing not in depth, but just briefly. The term factor cost. So it's one of the terms that we have underlined in our analysis of the table. So it is the cost of factors of production used in the production process during a particular period of time. So I did also give you examples. I said wages and salaries. I said profit. I said interest. I said economic rent. So that is our factor cost. The next one, explain the impact of subsidies. So we are going to underline, let's see. So let us underline explain. What are we explaining? We are explaining the impact of what? Subsidies on production. Be careful here. Why? Because we also have subsidies on products. So we have subsidies on products, we have subsidies on production. So the effect is not the same. So take note. Ne? On what? To producers. Okay, obviously, because this one would not have an impact to producers. It would have an impact to consumers. All right, so it just takes us to what it was going to be. So what is the impact? So the impact is that producers will benefit from lower cost of production. So how it works is that government pays a subsidy. In other words, they subsidize the production process. So employment subsidy is an example. So government can actually pay a portion of a salary for, a person that you employed. Government usually does this to promote the employment of a certain demographic. For example, if government wanted to promote the promotion of the youth or promote the promotion into senior position of women, government can say, if you have a female CEO, we can subsidize their employment. In other words, government will pay a portion of the salary of the CEO of the company. So that reduces the cost of the business. Then another one is that producers may be encouraged to increase production output. So it becomes a supply side thing. Then also producers may be encouraged to sell their products at lower prices. So this can also benefit the consumer, the producer in that sense. Right, then use the information in the table above to calculate the value of the gross value added at basic prices. All right, so we are going to take our calculator. I'm glad we took it out the other time. Okay, now let's have a look. What are we doing? We are doing use the information, calculate the value. Oh, A. Okay, A. So A, it's simply this plus this minus this. Okay, so let me not just say this and let me write it. Okay, so we have 6, 1, 7, 5, 5, 7, 2 plus 1, 4, 8, 3, 6, 1 minus 1, 3, 104 is equal to 631,829. Okay, let's have a look. Okay. Right, let's see. Okay, I'll just start with that one. What were the questions? Oh, it's the last one. Okay. Yeah, there we have it. If you see here, 631,829. Okay, so that's the answer. So we got it right. So we add taxes, we subtract subsidies. That's basically that. Okay, so let's put away our calculator and look at the other questions. Okay, so we will start from the first one. So number one, identify the item that refers to the prices paid by consumers for goods and services. That will be GDP at market prices. Well, it's the one I was saying. I had only said market prices instead of GDP at market prices. The next one, name any one example of taxes on products. Well, we have VAT, we have excise duties, general fuel levy, carbon tax. I didn't mention this one. Import duty, I didn't. But yeah, there we have them. This can help us in case it says name any other, and they will have given you the ones that you normally know. Then you need to know the rest. Then briefly describe the term factor cost. Yes, we said it is the cost of factors of production used in the production process during a particular period of time. The next one is explain the impact of subsidies on production to producers of goods and services. Well, producers will benefit from lower costs of production. Producers may be encouraged to increase production output, so output may increase. Producers may be encouraged to sell at lower prices. Okay, so we can take also lower prices. So those are our answers. So we are done basically on this one because this we did already. Right. Oh, I'm putting answers of something I shouldn't show yet because we haven't even studied whatever it is, extract or whatever. Right. Study the dialogue below and answer the questions that follow. Improving standard of living through skills development. Okay. I think literacy is most basic skill. I was having an argument with my grade 11s the other day. I asked the question, what is the most important factor of production? They said land. And I said, no, it will be labor. So we had a strong argument. I explained until they say, oh yeah, we think we agree with you. I don't know if they fully agreed, but come on, labor is more important. I'm not saying land is not important. They're both, actually all factors of production are extremely important, but there has to be one that is more important than the rest. And trust me, a country with zero natural resources can outclass a country with what matters is HR. So a country with highly skilled labor can use their highly skilled labor to actually have the other country depend on them because they have gold, but they don't know what to do with the gold. So this one's to say, oh, let's show you how to extract it. Let's show you how to process it. Let's show you how to turn it into a precious, product. So at the end of the day, think about it. You see that labor is very important. But let's come back to this. So now, yes, so this one agrees the lady. She agrees with the gent here. She says, yes, that's why skills development is part of the government's plan to improve the standard of living in the country. So the guy then continues and says, so the government should have programs to develop the skills of many people. Well, the South African government actually has those programs. So let's have a look at the questions and see what our questions require. Right, so we have number one, identify. So again, identify. It has to be there. What are we identifying? An HDI indicator. So we are identifying an indicator. Okay, so the thing we're identifying here is an indicator that does what? That relates to education in the dialogue. All right, so we come here, we are going to take literacy. I cannot highlight, so literacy. We are going to also take skills. So skills the basic skills here. Yeah, I think these are the two. Number 2, name the growth and development strategy. So here we're just naming. Now, it doesn't have to be in the extract because we're identifying something from the extract. Here you are just naming any. So name the growth and development strategy that aims to address the challenge of skills shortage in South Africa. That will be the National Skills Development Strategy. And this one is one of those where you can write in short NSDS. Now, this is where I was saying here you can write in short. You can use an acronym. You can use what do we call it if it's not an acronym? It's an abbreviation. Yes. Right. Briefly describe the term. So we are describing, not in depth, just briefly, the term economic development. So this is the term we want. Well, let me change it to briefly describe the term economic growth. We would say economic growth is an improvement in the production capacity of a country. Now that it says development, we can say economic development is an improvement in the standards of living of people within a country. Explain. So we are explaining. What are we explaining? The importance. So how important is what? Is healthcare. So is healthcare important? Yes, it is. How? Explain. See? So on what though? To human development. Okay. So we have 4 components to our question. We want to know, or we want to get an explanation on the importance of healthcare to human development. So healthcare can be important to many things. Don't worry about those. It can be important to productivity. It increases productivity. We don't want that. We want to human development. So try to analyze questions that way. So you can say access to quality healthcare ensures that people enjoy longer life expectancy by preventing and treating illnesses and diseases that can threaten their lives. So you can say something along those lines. It's 2 marks, so that would be sufficient. All right, let's look at 4.3.5. Explain how. So we want the process. How can the government, how can they do what? Promote skills development. So we want the promotion of skills development. Anyway, the answer will be the same in Zimbabwe, in Malawi. So how can government? Don't tell us how businesses can, because businesses can do something, but we don't want that. We want what is it that the government can do to promote skills development in South Africa. So what you can say is something like they can improve the quality of education. They can improve the quality of training. So in other words, government can have schools, government can have training institutions. That way, those institutions can help improve, because now we're answering the questions. So we're talking here public schools. So government can chip in there. Private schools, it is what the private sector can do, but no one asked you that. We want to know, what can government do? Another one, since it's 4 marks, so that won't be enough. You can also say government can work together with these private businesses. So government can work with Curo, you see, because Curo, just being Curo, is what the businesses can do. But government can work with Curo, government can work with UP, government can work with any educational institution. They can work together to develop apprenticeships. They can work together to develop internships and accredit them and all that stuff. So that's what government can do. And when we come to South Africa, we have South African Qualifications Authority that works with sector education training authorities. And we have them in each and every sector. Like there's an agri-SETA, there's a banking SETA, there's a tourism SETA, And for tourism, I think it's called TETA. Yeah, it doesn't matter what they are called. But basically, we're answering the question, what can government do? So with that, let's look at our answers. So we had literacy, we had skills on identifying from our dialogue, HDI indicators. Right, then name the growth and development strategy. Okay, it was the National Skills Development Strategy. Do you notice that also an abbreviation is correct? Briefly describe the term economic development. So the key thing about economic development is standards of living. If it was economic growth, it would be production capacity. Explain the importance of healthcare. Remember, this is where I was saying on what? On human development. Access to quality healthcare ensures that people enjoy longer life expectancy. So this is the benefit to people, so people can live longer. So you see, by preventing and treating illnesses and diseases among the population. Then good health reduces absenteeism at work and increases productivity to higher income levels and improve standards of living. So it benefits people. Right, then how can the government promote skills development? Yes, government can improve the quality of education and training by investing in schools and vocational training institutions, such as updating the curriculum to meet current job market needs. Like our current syllabus needs to be seriously updated or upgraded. Right, work together with businesses to develop apprenticeships and internships that provide practical experience to students and job seekers. Offer incentives to and subsidies such as the Skill Support Program to businesses, and invest in employee training and skills development programs. Okay, I feel like just running through everything and finish because wow, this has become very long. Or at least we are now on the last part of question 4. Right, the first one saying briefly discuss. So here we are going to discuss, not in depth, but just briefly, natural resources and climate conditions. Guys, this is an essay. Discuss in detail reasons for international trade. So we have natural resources, we have climatic conditions. Well, to be more correct, discuss in detail supply reasons for international trade. Isn't this a piece of cake? Let's see this one. Analyze the importance of demographic indicators. This is an essay, but it's an essay you don't know because it's under economic pursuits. So yeah, that's where you can be like, oh, I wish I knew, but it's fine. I'll help you. So briefly describe natural resources and climatic conditions as supply reasons. Oh, I even said these are supply reasons, and I didn't see it was written actually like that for international trade. Okay, so we can start with natural resources. The first thing about natural resources that I always say is that they are unevenly distributed. So countries were not blessed the same. Some countries have oil, some have gold, some have this. And even within the country that has gold, that gold is not evenly distributed within the country. We have provinces that have something that you don't find in another province. So for that reason, countries, just like provinces, have to trade with one another. Because if you need what the other, like for instance, Gauteng, you can go to a seafood outlet in Gauteng, but Gauteng does not have a sea. Where did the seafood come from? It came from those provinces that have access to the ocean. So the same way within a country, we can buy something that another province produces, and you might find out that we have things that they don't have in those provinces, but they need them on a daily basis, like provinces that don't have land for agriculture. Provinces with land for agriculture can plant, harvest, and distribute to those provinces that don't have completely or do not have enough. Because Gauteng is a good example of a province that doesn't have too much agricultural land. But it doesn't mean Gauteng does not produce maize at all. It might have farmers, but they are not as many, and so their production is not enough for the province. But we're not talking about provincial trade, we're talking about international trade. The point I'm making is the same way we need something from another province is the same way someone from another country may need something that we have in this country. So we don't have coffee, but we need coffee, so Brazil comes into play. We don't have oil, but Venezuela has oil, so they come into play. Things like that. So natural resources are unevenly distributed. Climate also is unique or is different from country to country. Certain things they grow in certain climatic conditions, and if we don't have, we need to buy from them. Again, we can throw in the example of Brazil because it can work in two ways. Because when we say natural resources, land is one of those. So with coffee, it's not that it's the climate, it's also the soil, because there's soil that does not grow coffee. So it's the climate, it's the soil, it's everything, it's nature. So you can throw it there, you can throw it there. That's it. Okay, let's have a look at our answers. So in as far as this first one is concerned, 4.4, we have natural resources are unevenly distributed across countries of the world. They vary from country to country and can only be exploited in places where resources exist. Some countries have a variety of natural resources at their disposal that can be exploited, while others have limited variety. South Africa has large deposits of gold, while Nigeria has crude oil. So these two countries can then trade. And then the availability of natural resources creates a platform for specialization and an opportunity to earn valuable export revenue. Okay, that's it. Let's look at climate. Every country has a unique climate which allows it to grow specific crops. Promotes specialization of production and empowers countries to produce at lower costs per unit. Climatic conditions make it possible for some countries to produce certain goods at lower prices than other countries. E.g., Brazil is the largest producer of coffee. All right, that's it. Let's look at the last one before we go to our essay. Analyze the importance of demographic indicators to the South African government. All right, so demographics, it's matters that cover quite a lot. We can talk about age composition, we can talk about sex, we can talk about gender, let me put it that way. All those things, they are demographic factors. Right, so the government, like I'm saying, can use demographic indicators to plan for the future and achieve certain outcomes, because now, if you don't have these demographic factors, you might put resources on things that you actually don't need. But if you do or study demographics of a country, you will realize that you will put resources where they're actually needed. All right, so demographics relate to the number of children in different age groups, help government to plan educational infrastructure, because you might build schools when you don't really have the numbers, and that's a waste of resources. You could have used that money for something that particular area would need. So demographic analysis will help funds not to be wasted. Okay, let me just throw in the answers so that we finish, and then that'll be the last thing before we go to our essay. So the government uses demographic indicators to plan. So yes, they can be used to plan for the future, because now you know how much you need, how many hospitals you need, because you analyze the demographics. Demographics relate to the number of children in different age groups, helping government to plan educational infrastructure. Okay, so educational infrastructure, so building of schools. Not just that, also, health. Understanding the working age population helps the government to create jobs. You see, so knowing how many people are working or have reached the working age would help government to plan on job creation because they know who is part of the labor force, the proportion of the population that forms the EAP. Having that knowledge helps. Then demographic trends allow government to make informed decisions that address the needs of the population, promote social equity, and ensure sustainable development. Well, you can read the rest. I'm not doing it just to rush, and I don't need now to go back and forth because now we go into the essay. It will just show what the essays are. I might want to just show you. Okay, I don't need to show you the other one because I believe you don't need it. Right, so it says here, answer any one of the two. So we're going to answer the first one. And why are we answering the first one? Because it's macroeconomics. Right, it says discuss in detail reasons for public sector failure. Okay, if you check, we had nothing in 8 marks that was asking this. So it came now as a possible essay. All right, so how can fiscal policy be used positively to influence the economy? So this one, if you have knowledge of the new economic paradigm, then you can benefit. And this one, I'm glad it's not evaluate, so it was quite easy. It just wants you to tell how the fiscal policy can be used positively to influence the economy. So this part also, let's have it underlined because we want positively. So let's have a look at our answers. Now, I have a mnemonic for this one. It's my little brother plays soccer at Sundowns. All right, let's have a look. So we have our introduction. You tell us the public sector is part of the economy that includes all entities that are owned and controlled by the government and are responsible for the provision of public goods at a lower cost or free of charge. Right, so this is the my little brother plays soccer. Okay, let me do it like this. So here's my, because someone is confused as to what I'm saying. Little brother plays soccer at Sundowns. Okay. Well, these are the ones I have. The lack of accountability and problem of assessing needs. But we had this with Papapemos, problems of public sector provisioning. But anyways, let's have it like that. So how are these? Well, these are the reasons why the public sector actually fails. So let's look at management failure. So sometimes government departments and state-owned entities are poorly managed. So the reason why they fail is because they are poorly managed due to the application of conflicting policies, lack of leadership, inadequate skills, and insufficient experience. So you can use what you know based on your experience, but the main thing here is poor management. Government departments are not expected to maximize profits. Okay, so but F&B is expected to maximize profit because government institutions, they look at the social side of things, right? So that can contribute as well to management failure. Then management failure can result in budget allocations that are based on estimated costs and needs and needs not being catered for. Right. Then the next reason why public sector fails is apathy. So public sector failure can result from apathy and indifference on the part of public officials, civil servants, and individuals employed in government departments and state-owned entities. Successful public provisioning relies on long-term accountability. Accountability can be potential to diagnose inefficiency, corruption, and poor services, and the determinants of those symptoms, such as lack of resources, low motivation, poor training, and lack of competency. We also have a lack of motivation. People, let me not read because, nah. So, lack of motivation, there's a lot of motivation in private institutions. Motivation can come from how they are compensated and all that. You can take that. And then politicians, corruption. They are very much corrupt. They do things for vote maximizing as opposed to the actual doing of the job. And then we have special interest groups like rent seeking, and special interest groups can influence the government to act in a certain way because they have some agenda. Trade unions, if you check, I'm an employee myself, and I seem not to like some of the things that trade unions do because they're not really good for the economy itself. Right, bureaucracy is one of the reasons why, public sectors fail, because there's too much red tape. There's, they like to follow a lot of protocol, even though that can cripple production. They will focus on that. So you can read though and get the sense out of this. Then we have, I'll skip this one. Then we have structural weakness, duplication of roles, things like that, complex and poorly designed organizational structures, unclear laws and policies, and then and overpopulation may also lead to excess demand for employment. Right, so that's it in as far as the main part is concerned. You see that you're getting marks for the headings. And if there was an example, you'd see you also get marks. If you could think of an example, you can also get some marks. Let's look at the additional part, which is the last thing we're going to cover. So fiscal policy, we wanted positive effects. Right, so a progressive income tax system makes income more evenly distributed. So it bridges the gap, so more evenly distributed. Decrease in direct tax, such as pay as you earn, increase consumer disposable income. So disposable income goes up. Let's take it from increases. Then a reduction in indirect tax, such as VAT, increase consumption. Okay, so this is the advantage we want here. Will increase consumption as the price of all products would have gone down. Then increase in direct tax, such as personal income tax, can reduce inflationary pressure. So this sounds like a bad thing, but the first part sounds like a bad thing, but then the thing that then happens with it is something that many wouldn't understand. Inflation will be regulated, even though we're saying about something that is actually bad for our disposable income. It's good actually for inflation. The fact that we cannot afford is good in this case. Right, then social grants paid by the government to households may increase consumer spending. So this is the effect, increase consumer spending. Then production subsidies paid by the government to some producers reduce their cost of production. So reduction in cost of production. And then funds allocated from national budgets to provide free services help to improve the lives of many. So lives can be improved. Okay, so already by now, this is enough. So the rest, you can just take it. But this has brought us to the end of a very long... But before I conclude, I want you to take note of this. Accept any other correct higher order. So it has to be correct and it has to be higher order. By the way, let's have a look at the one they gave us. The government should implement suitable. You see, this is like a normative statement, not a positive statement. The government should. So this is more like your opinion, what you think. You're not just taking a word and defining it. You're giving your opinion on what you have been covering. So the government should implement suitable measures to ensure that government departments state-owned entities and other state entities deliver quality services to the citizens? Well, it's a simple, correct, high order response. So try to find something like this. Don't define a term. Don't say circular flow is a model that shows how participants in an economy interact. Well, it's true, it's correct, but you're just defining a term. It's something you got from the book. We want something that you'll probably tell us what you think, what's your opinion on and it has to be relevant to what you were answering. All right, so ladies and gentlemen, this was very long, probably the longest video I've ever made, but nevertheless, it was quite fruitful. I'm looking forward to do paper 2. There is no way I'm going to do it today because, wow, this has left me tired. So I need to recover and then I can do paper 2 maybe tomorrow. But whenever I'm going to get time, I'm going to do paper 2. Thank you so much. Subscribe and like and share with your friends and colleagues. If you are teachers, please share with your learners. I'd really love to hear feedback. I'd really love to know that I've helped someone to get a distinction, as that's my goal. Thank you so much. God bless.